3 companies are worth more than $500 billion combined. None of them are public. And Wall Street is quietly freaking out. OpenAI, Anthropic, and SpaceX have a combined valuation that exceeds Nike, Starbucks, and Goldman Sachs. But if you're a regular investor with a 401k, you can't buy a single share. The biggest wealth creation event of our generation is happening behind closed doors, and the stock market might never recover from being left out. This isn't a story about tech companies taking their time. This is about the stock market losing its grip on the future. When the most valuable companies in the world don't need you, what are you even trading? Here's what's actually happening. OpenAI is reportedly worth $157 billion in its latest funding round. Anthropic just raised at a $40 billion valuation. SpaceX is valued at $350 billion, making it worth more than Coca-Cola. Add them up, and you get $547 billion in value that's completely invisible to public markets. For context, that's larger than the entire GDP of Poland. It's more than the market cap of Costco and Netflix combined, and it's all locked away from the average investor. The traditional path used to be simple: start a company, get venture funding, grow fast, go public, let everyone share in the upside. That's how Microsoft did it, how Google did it, how Facebook did it, but that playbook is dead. These companies aren't delaying IPOs because they're not ready. They're avoiding them because going public is now a downgrade. Private markets have so much capital that companies like OpenAI can raise billions without ever filing an S1. In 2024 alone, OpenAI raised $6.6 billion in a single round. Anthropic pulled in $7.3 billion across multiple raises. SpaceX doesn't even need to fundraise anymore. They just do it to give employees liquidity. The money is infinite. The pressure is zero. Why would you go public? When you IPO, you get quarterly earnings calls where analysts grill you about missing revenue targets by 2%. You get activist investors demanding board seats. You get short sellers betting against you on CNBC. You get Elon Musk tweeting that public markets are a pain, and he's actually right for once. But here's what nobody's talking about. This only works if you're already winning. If you're OpenAI with Microsoft backing you, or SpaceX with Pentagon contracts, you can stay private forever. If you're a normal startup, you still need the public markets. This is creating a 2-tier system where the best companies never have to share the spoils. The numbers prove it. In 2000, there were 457 IPOs in the US. In 2023, there were 154. The average age of a company going public used to be 7 years. Now, it's 12. By the time these companies hit public markets, all the exponential growth already happened. Retail investors are left buying into the plateau. And it gets worse. The companies that do go public are increasingly the ones that couldn't raise private capital. They're the second-tier plays. The stock market is becoming a dumping ground for companies that ran out of options. If you're a normal person with savings, you're being systematically locked out of generational wealth creation. Your grandparents could buy IBM stock in the 1960s and ride the computer revolution. Your parents could buy Microsoft in 1986 and retire early, but you can't buy OpenAI, you can't buy Anthropic, you can't buy SpaceX. The biggest returns of the AI era are reserved for venture capitalists and sovereign wealth funds. Accredited investor requirements mean you need a net worth over 1 million or income over 200,000 to even access private markets. That's 13% of US households. The other 87% are watching from the sidelines. Mutual funds and pension funds are trying to adapt. Some are buying shares on secondary markets at massive premiums. Others are investing in venture funds that hold these companies, but it's not the same. You're getting diluted returns through multiple layers of fees. Here's the contrarian take nobody wants to say out loud. Maybe the stock market as we know it is actually obsolete. Public markets were invented to aggregate capital from millions of small investors because companies needed that capital to grow. But AI companies don't need your $5,000 investment. They need compute clusters that cost $1 billion. They need partnerships with Microsoft and Google. They need geopolitical backing. The capital requirements are so massive that only institutions can play. Retail investors are irrelevant to the equation. The stock market's original purpose, democratizing access to company ownership, is dead. But then it got worse. Because now these private companies are starting to behave like public ones anyway. SpaceX runs internal stock sales twice a year, where employees can sell shares. OpenAI is reportedly planning a similar program. They're creating private liquidity without any of the disclosure requirements. You get all the benefits of being public, the ability to reward employees and early investors without any of the regulatory burden. So, will they ever IPO? The honest answer is, only if they have to. OpenAI's structure is bizarre. It's technically a nonprofit that controls a for-profit subsidiary capped at 100x returns. Sam Altman doesn't own equity. The governance structure would make a public offering incredibly complicated. And why bother? They're raising money at a $157 billion valuation without any of the regulatory hassle. Anthropic has taken $7.3 billion from Amazon and Google. They're essentially corporate-backed. An IPO would mean disclosing exactly how dependent they are on those partnerships. It would mean revealing margin structures and compute costs. Why expose yourself like that? SpaceX is the most interesting case. Elon Musk has repeatedly said Starlink, the satellite internet division, might IPO separately. But SpaceX itself? Probably never. It's too strategic. It's too tied to national security contracts. Making those financials public means giving China and Russia a roadmap of American space capabilities. Some analysts think market pressure will eventually force them. If private valuations stall, they'll need public markets to keep growing. If employees demand more liquidity, they'll have to offer it. If regulatory pressure increases around private company size, they might be forced to choose between IPO or breaking up. But I'm not convinced. These companies have figured out something the market hasn't priced in yet. You don't need to be public to be powerful. You just need to be inevitable. OpenAI is building AGI. Anthropic is backed by the biggest tech companies on Earth. SpaceX is literally the only way to get to space efficiently. They have monopolistic positions in markets that are about to explode. Why would they share that with passive index fund investors? The stock market's biggest problem isn't that these companies are staying private. It's that they've exposed the system's irrelevance. If the most important companies of the next decade don't need public capital, what does the New York Stock Exchange actually do? There's talk of regulatory changes. Some politicians want to force companies above a certain valuation to go public. Others want to lower accredited investor thresholds so more people can access private markets. But these are band-aids on a broken system. The real question is whether we're watching the beginning of a post-public market economy, where the biggest companies are owned by a small group of institutional investors and insiders, where retail investors are left trading legacy companies while all the real innovation happens in private. Here's what keeps me up at night. This isn't just about missing out on good investments. It's about a fundamental reorganization of economic power. When only the wealthy can access the best opportunities, wealth concentration accelerates. When pension funds can't buy into growth companies until they're mature, retirement security weakens. When the stock market becomes a secondary market for has-beens, our entire financial system shifts. And we're not ready for it. Regulators are still using frameworks from the 1930s. Financial advisors still tell you to buy index funds that increasingly don't include the companies that matter. The whole system is running on momentum while the future is being built somewhere else. OpenAI, Anthropic, and SpaceX aren't outliers. They're the new normal. Every billion-dollar startup is watching and learning. Stay private longer. Raise from institutions. Give retail investors nothing. It's the optimal strategy if you can pull it off. Wall Street will adapt or die. My bet is they'll adapt by becoming more exclusive, not more accessible. Private equity firms will launch funds of funds that invest in these companies, charging 2 and 20 fees for the privilege. Wealth managers will create structured products that offer synthetic exposure. The game continues, but the average person gets an even worse deal. If this keeps you up at night, subscribe. We cover this every week. If you found this useful, don't forget to hit the hype button. It helps the channel grow.